Hello, everybody. Welcome back to the Dollars and Nonsense podcast. This is Michael Duryea, your new host on the Dollars and Nonsense podcast show. Hey, just another quick update. If you missed last week, we are relaunching the podcast, currently in the process of doing everything to relaunch and bring a bunch of new and exciting guests on the show. And in the meantime, we're going to be re-airing some episodes with Ray Poteet, our very own beloved Ray Poteet, who taught all of us so much about infinite banking. If you didn't get to listen yet to last week's episode when Ray came on the show in February of 2018, I would strongly encourage you to go back and listen to him talk about his perspective on IBC and how he came to IBC and how it all started for him. This week, we're re-airing another episode with Ray when he was on the show in December of 2018 talking about some of the older policies that he had and how those policies were performing and what he was able to do with them, and some of the things that he and his clients had been able to do that had really taken the stress away from spending large amounts of money with the knowledge of the system and how it works and how you can recapture money. So without further ado, enjoy Ray Poteet on the Dollars and Nonsense podcast. My name is Michael Duryea. This is Dollars and Nonsense. If you follow the herd, you will be slaughtered.
In this episode, we interview our mentor and the founder of Living Wealth, Ray Poteet, as he passes on wisdom, teaching parents and grandparents how to build wealth for the next generation. She's Holly, and she helps people find financial freedom.
He's Nate. He makes sense out of money. This is Dollars and Nonsense. If you follow the herd, you will be slaughtered.
Welcome to the show again, Ray. It's great to have you back, and I know the audience is always looking forward to hearing from you when we get a chance to interview you. So, welcome back to the show.
Thank you very much. It's totally a privilege.
Holly and I are excited. We've heard you speak many times, whether it's in a workshop or on webinars or whatever it is, on what you've done for your kids and your grandkids with wealth and with raising them up with a wealth mentality and teaching them the principles and everything like that. So we wanted to give you an opportunity here to share with our audience some of the advice that you may have and wisdom you may have from going through it. Feel free to mention some mistakes as well as some of the pluses. How has infinite banking kind of helped you, I think, in teaching and in raising up your grandkids and your kids to build wealth? Was there a difference from when you learned about IBC and how you went about things with them as opposed to before IBC?
No, there was a change. I think prior to IBC, I did no teaching. I just did something for them. And at some point in time, I say, I'll hand this over to them. They really were unaware of what I had done and when I did it or anything. But when IBC became a part, and it's actually your wife was the one that got me involved with it. She read Nelson's book and she said, well, why shouldn't I put my whole paycheck into the policy? And she just read it once. I think she was 12 or 13. She wasn't that old, but she read the book and she got it just like that. She had it. From that point on, it didn't matter how it worked. She just liked it was her bank and I can put my money in my bank. And to get that across at a young age, I think is amazing to be able to live it and then let them catch it, because kids really catch. It might be easy to teach. We say, you're a father, not real easy. They imitate us. To sit down and try to teach them a principle, that I believe is more difficult. But
yeah, you can tell them, it's important to save, it's important to think about the future, it's important to do all these things. But if you personally don't, and
Right.
they can see that, I think you're absolutely right. It's not going to be relayed. Actions speak way louder than words to kids.
And kids are, under God's eyes, we're all kids. I mean, I had an example yesterday of a lady that called and wanted to do more with her program. And I looked at her GPS and it said 0, 0, 0, 0. She didn't know any. She had taken a vacation with their entire family to Greece. They had went on another ski trip. They had bought a couple of cars. And she says, what can I do more? And I was thinking, wow. And she said, could we attack our house mortgage? And it was really neat as we shared. She was really getting excited about all the things that she had done that we had shared with her. I didn't realize it was that many. She's been working more closely with Paul. And she says, and I want to come to your workshops. I want to learn how to do more. I want to do this. It's sort of like I was watching your son last night picking up glass pieces and putting them back in the bucket. And I asked Daniel what he's doing. He says, I'm cleaning up. And so they imitate, and we'll do that. And I think if we can get it with money, because there are really no classes on money. We see it, we get it, we have it, but we have not really been taught, or I was not taught, even though I was into the industry, did marketing, had all the designations after my name. There was no real classes on money. Started learning about it from Nelson and really got into it with Rabbi Lapin. And one of the things that he says that I would really like to emphasize, Jews do not have a money gene, but they do know the rules on money. And if you know the rules and follow the rules, it comes automatically.
Yeah, and I think we'll get to that in a moment. I might ask you a question on the
Okay.
rules for sure, and how that can, IBC can help with that. But I was curious, I've heard you talk, for those who have kids and grandkids who listen to this, what have you done for them? And, for maybe give some ideas for other parents to model, both, mainly, with the policies and what you're thinking of taking place there. And
with my children, because they're all in their 40s, and I learned about infinite banking right when they were 30, I actually put a $30,000 policy on each one of my daughters and funded it the way we told people to do, and still funding it. Have borrowed a couple $100,000 from each one of them. If I were to turn those policies over to them today, the funding is $12,000.
so you started at 30,
And
the paid up additions rider, for those who know that a little bit of the details about IBC who are listening, PUA riders dropped off, so now they're paying just
the 12,
the base premium on it.
That's correct.
Or you're paying it right now.
Still
paying it.
Yeah, I mean, but if I were to turn those over, they're making 85%.
Or they're putting in 12 and getting about
22 last year, 23 that's coming.
In growth.
Yeah, so it'll be over 100% before they're 15 years old. That seems strange, but those 15 years have flown by. I mean, just flown by. I can still remember 2004, and that seems like eons ago. Holly wanted to make sure she got married before she was 30, and she made it by a few days. I think now that what I gave them for that wedding, and I used infinite banking, and she got more money, almost twice as much as her older sister, but not nearly as much as her twin sister. And I thought it was a fortune back then, and I look back and it wasn't, but it was very profitable. Paying for a wedding, I think as a parent, and you have daughters, it's always something you want to do. And up until I knew about banking, it was something I dread.
They have this vision of this glamorous wedding, and you want to give it to them, but you don't want the price tag, so you're
Right.
torn and you're stressed out. And it's changed since IBC for some things I've purchased that normally would have been in dread.
You grow up and you have kids, and you happen to have daughters, and you know by the tradition, the parent of the daughters paid for the wedding. And God didn't give me any sons, he just gave me daughters. So I said, well, I got 3 of them, and I did pay for 3 of them. And I can say they got more elaborate and easier to fund and happier to fund as they got married, from the first one to the last one. If I could put that joy into parents' hearts to know that this is something that they want to do and not be fearful of it. Matter of fact, we had a very good friend who allowed his wife and daughter to fly to New York to get her wedding dress,
Mhm.
and try them out and various things. And he says that the only reason he was comfortable in doing that is he knew that it wasn't going to cost him anything, that he was going to recapture the money.
Because he had the system.
Yes.
Yeah.
And he's using
And he's using it.
very effectively, very, very effectively, probably as much as anyone we've worked with. He's on it on a daily basis, and I'm maybe every other day or every third day. I'm not on it every day like he is,
And then your grandkids, Ray. So
Yeah.
you've got policies on your kids. Is that the only one you've got on them still?
No,
or do you have other ones?
I've got 4 policies on each one of my children, 4 policies on each one of my grandchildren, and just 1 policy on each one of the great-grandkids. But it's as substantial as the 4 policies is on the grandchildren.
Yeah, I've noticed that just from the time I've been here, the policies you used to buy you were still getting smaller ones, and it's only been we talk to clients about this. Holly and I do, I'm sure, about just getting started.
Right.
And it is true. I've seen it with clients. I've seen it in your life. I've seen it in my life. The policies do seem to get bigger. There's just a level of comfort that increases in infinite banking that I don't think is anywhere else. As you go, just desperately wanting more because there's no risk to it and there's freedom in it.
I think the other thing is that you really discover a lot of money that you didn't feel comfortable in spending previously, that once you understand the system that you're just recycling. I'll give you a great example. This morning I was in my car, got out of the car, come into the office. It just hit me before I spend any money, and I was thinking about spending quite an amount of money. I want to put that through the policy. What are you thinking of? I came in, I ran to didn't run, I got to the computer, I brought up Truth Concepts, did some calculations. And if I did it the way I was thinking,
just paying for
it off and
without
not
having
thinking
money in
about
the policy.
it, would have been in 6 figures what it would have cost me. And I believe it was only God, the Holy Ghost, that says there's a better way to do this. You know it. Why don't you do it? You teach it. And yet, here I am, an individual that is very active with a system that got sidetracked.
Man, it's easy
And
to do.
it's easy to do. Very easy in the world we live in. So it's only due to the prompting of the Holy Spirit and God's grace that I didn't follow through with that.
You've seen what the policies that have been around for a little while do.
Oh, yeah.
Having done this for 17 years, IBC, you're at the stage now where you're still doing more policies, partly because the old policies, you're just seeing how effective they've become. And that's what I wanted to give you an opportunity to say about too, on as a parent, being able to buy policies on children and grandchildren so that they can start, as you've mentioned, if you were to give the policies to your daughters already, those first ones, and they're almost doubling the premium each time you make a deposit.
Yeah.
Who wouldn't want that? And then the grandkids could even be on a larger. So you've seen that happen. That helps you. And I think you even wanted to mention,
I do.
what you have done for your grandkids and where those stand.
Well, these are some that I started on the same day for all 3 of Holly's girls. They were 0, 1, and 2, when I started them. At that time, maybe it was my thinking or whatever, but this is 9 years ago. These policies are 9 years old now, okay? That I thought $10 a day, $300 a month was a lot of money. And so I started these programs on all 3 of these grandchildren, and they were the largest grandchildren policies I had started at that time. No problem with them, paid them annually. Not only did I start the 3 children, I started one on Holly and one on her husband, Charlie, at the same time too. So it was a whole family that I started at that time. And I've been paying them, and it was through these policies and a dream I had that we changed things. These are set up the old way in the 40-60 split. You know what I'm talking about. But the new way would even be better. But I'm now paying these annually, and let me just explain. 40% of 300 is 120. 120 times 12 is 1440 a year. And that is what I'm paying in annual premium
on those
these
three policies on
these
your
three
grandkids.
policies right now. I did this because I knew you'd asked me to be a part of this podcast, and I pulled them up, and this is true of all three policies, regardless of the kids' ages. This last year, they grew $2,693 on a $1,400 contribution. That is a $1,221 growth on $1,400, which is 74%. Now, that's the way I think. Wow, 74% on $1,200 immediately. And what I said was, well, why didn't I do $600 a month or $700 a month?
Right.
I mean, you've heard me say that, but I wanted you to also know that when these kids, when they're 20 years old, this policy grows by $5,401.
Wow.
I'm going, wow, that's exactly what I said, and let's just say that things are normal. They buy a used car for 25 grand. That car can be paid for from the growth on this policy in the normal 5-year period. And they have the car and they got their money, and I'm going, I don't think as a grandparent, and I pray that I've poured it into my children, but I hope that I get the opportunity to sit down with them and share with them my thoughts when they go to get that car, or they buy a graduation present, or they get an engagement ring, all of the things that I hope I get to see them do. I wasn't fortunate enough or have the income to buy my bride an engagement ring. And now I think back about some of the things that people have struggled. I mean, I remember Charlie and coming up with money and how hard it was for him to let go of Holly's engagement ring and various things. And that you can just, not that you shouldn't do that, but that money is a tool. And if you understand how to use that tool properly, it brings an ease to you rather than a stress. It brings a comfort, not to be know-it-all or be above it, but that you've learned how to use this tool, just as you see a good athlete using his tools, his athleticism and the sport, or you watch someone that's a good engineer or a good artist. That's what my prayer, my hope, my desire is for the clients and people we work with, is we teach them how to be Picassos with banking, that they can draw with it and bring out their dreams and things, and that we are used as coaches and mentors to help them get there, to move faster, more efficient. And the only difference is they know the rules.
Now, for some parents out there, or even grandparents, a lot of questions I get asked is, how are we able to buy a policy on our grandchild or even a great-grandchild, because we're not the parents? So why can we do it, and how is that possible? Can you tell us a story you might have?
Oh, I've got a number of stories, but I think the one you're looking for is on our latest great-grandchild, Daniel. I was third in line because at this point, the parents, who the father's sitting in the room, they got the first choice of policies, and then the grandparents got the second choice. And of course, I was at the tail end as a great-grandparent. Those parents and grandparents brought larger policies than I started with on their children. And then, of course, I wanted to buy a large policy on that child. And the insurance company really didn't see the reason that a child just born would need $3 million worth of
Life
insurance on them. And I agree with them, they don't. But what I did is, the president of the company I was able to work with, I know personally he's a grandparent. He's not a great-grandparent, but he's a grandparent. And I just called him and asked him, what's the greatest gift that you could give a grandchild? He said, well, a life insurance policy. And I said, well, your company isn't allowing me to do that with my great-grandchild. He said, I'll make it happen. And he did. I pray that when I give this to Daniel, or my wife gives it to Daniel, or Nate gives it to Daniel, when it's passed down to him, that he will see the value of it for what we wanted it to be. I'm confident he'll know how to use it. And if he doesn't use it right, I just will tell him the hounds of heaven will haunt him when he gets there. And, because True. This tool, if used properly, can fulfill dreams that we only dreamed about and become a reality rather than a vision that doesn't take place.
You had one client, and I've heard you mention this, where you also had to kind of get the president of the company involved, where that he had a fairly large estate.
Huge.
And wanted to make sure that the second generation wouldn't gobble up all the money.
Right.
And he wanted money to pass down to the third generation. So correct me if I'm wrong, what he did was actually had gifted money to his grandkids that was used to buy policies on the parents.
That's correct.
That way, when the parents die, the death benefit would automatically be passed to the third generation, and there was no way that the second generation could mess with those because they didn't own the policies on them. And so it was a way to guarantee a generational transfer too.
Yes, that parent had seen one of his children blow through a huge amount of money in the seven figures. And his concern was his grandchildren's, he guaranteed them an estate, is the way he said it.
Right.
So it had never been done I've been in my classes and everything. It's being taught now because this gentleman thought of it. An insurance company didn't think of it. And he is still well pleased with that and is still gifting money to his grandchildren to not only buy a policy on one parent, bought them on both parents.
Right, yeah.
And so he didn't care which way, he wanted to guarantee that his grandchildren would have an estate.
And an observation from me as we kind of maybe wrap things up a little bit here was what we wanted to kind of mention with the rules of money that you mentioned, that the Jews have been raised up knowing, and Rabbi Lappin, who we've had on the podcast, has taught about some of the 10 commandments of making money and things like that. With that being said, one observation I've had that has helped, I think, in your family and all of us learn from is that in banking, as you've built up large policies and been able to lend money to your kids and myself and grandkids and so forth, and had us repay you for it as a banking tool, to me, it's modeled how money's supposed to work, and how that it's really modeled the banking practice. So instead of getting into the spending mode, like I feel like a lot of America is in, where it's my money, I can spend it, to more of a banker's chair, where we actually see ourselves as the banker and we always repay where we've taken the money from. I think that's been a great way to model, and I thought that would be a good thing to mention for the audience as well, as they're trying to incorporate their kids and their grandkids in it, is potentially have you be the bank for them a few times, and they will certainly get into that flow of, hey, we'll use a policy to get money, we'll repay it, even if it's on mom and dad's and it's their policy. That way, when it does happen, hopefully that flow will transfer to the method, the rules of money will transfer.
And it does. I'll mention two things. One, my oldest daughter was the first one we saw it with, and so we started with a house. That sounds a little strange, but it isn't. It was a $200,000 house. And we've been doing that since 2001, and this last year, 2018, because of the value of that account. It is my account, but they have full access to it with my permission. She bought a very valuable or very expensive car with it because she saw that the money she had put in was growing and that there was plenty there. It hadn't been wasted away. And she picked the repayment on the car and everything, and that's going back into policy again. So it's just multiplying, going larger. What I saw in my own life was that by being able to teach the children, grandchildren, that we keep the money in the family and that it recirculates within the family the same way it would in a conventional bank, that we never lose control of it or the amount of it. And the tax-free growth is now becoming quite substantial. So we can do some unusual things in the way of gifting the houses and things like that, that again, we had never dreamed of. I had the privilege of just loaning our church a huge sum of money, just with that concept in mind that I'll get it all back, even though I'm actually paying the loan on it through my donations. They were sort of amazed, and I'm not amazed. I've done that now with about 7, 8 charities, and It seems like they get a line and want to know if there's any more coming, things like that, which is good.
Yeah.
You know, you love working with ministries that are out there to serve mankind. And that's what God's allowed me to do.
That's great.
I would say that they know they're going to get every penny back. And I can tell you, when I learned that and went and did my own homework and found out how much money I could have had that I didn't have because I didn't know the rules. I owned a product, but I didn't know how to use it. It's sort of like having a computer with Excel and Word and PowerPoint all on it, but you don't know the program, so what good did it do you?
Yeah.
None. I had that with life insurance. I was paying big premiums, and no one had taken the time to tell me how to use it properly. And I was just blown away. I'm still blown away. Even when I looked at this policy yesterday and the policies I've had, I'm sort of saying, I'm glad I got them. I'm glad girls will have them. This is, you know, if you really stop and think about it, it's about $3 a day, which, you know, by the time they start using them, it'll be a can of pop or something, a bottle of water. And be better first put in here and then go buy the water because they'll have the
About $10 then.
Yeah, if they go buy 2 bottles, they can buy
Yeah.
one for the friend for the same amount. I am absolutely blessed and privileged to work with you and Holly, but also to work with every person that God's brought to Living Wealth and share this truth with, and hope that we can put it in a word, a document, some form, podcast, that we can get the point across that there is a dream that can be filled. There is hope where there was none, that the promises God made are yes and amen. And if we can help show that in the area of money.
And we do, and it's through your mentorship. So it's been great to have you on this show, and I hope those listening got something that they can take home with and they'll model after. And actually, for those who are listening, next podcast, we're going to bring Ray back on again and have him discuss some of his history and some of the mistakes that he's made that have kind of brought him to where he is, and hopefully help you guys not make the same mistakes.
This has been another episode of Dollars and Nonsense. If you follow the herd, you will be slaughtered. For free transcripts and resources, please visit livingwealth.com/E58.